Again, thank you for joining us on the second part of the Succession in Cyprus webinar, which Kendris, I'm Marios, and our co-hosts Achilleas Dimitriadis and George Taushanis are joining us from Lellos Dimitriadis Law Office.
Hello to everyone. Nice to see you, and hope you find the presentations interesting. George?
Hello everyone, very nice to see you and hope that you will enjoy the presentation.
So thank you very much. Due to unforeseen circumstances, Sarah Gunnervik could not join us, so I will be taking on the part of presenting Kendris in this webinar. Just a very short presentation for those of us who are joining for the first time. Kendris is an international advisory and fiduciary services firm. We cater to the needs of wealthy individuals, family offices, and institutional clients. Our base is in Switzerland. We have established Kendris in Cyprus since 2017, and we are a 100% management-owned firm that is rooted in the Swiss entrepreneurial spirit. We are partners and directors who own the firm, and we have no outside shareholders. This allows us to maintain our independence as a group and to be able to work with all the various partners that we can, from legal counsel to investment managers and to wealth advisors in the world. We have 110 years of history as a group, but this year we are celebrating 20 years of the name of Kendris, and we are very proud to have the office in Cyprus, in Larnaca, where we employ 35 people plus, and we focus on fiduciary services to high net worth individuals and their families. Our main job in Cyprus is to provide corporate services, and we do so in a very digital manner. We are experts in providing digital accounting services, so we provide digital CFO, reporting, payroll, and succession planning services to individuals and their families. In 2025, we are proud to say that we were nominated and won the City Wealth IFC Award as Trust Company of the Year. And I'm very happy to now hand it over to Achilleas, who will introduce the offices of Lellos Dimitriadis.
Thank you, Maria. Thank you for making the introduction, and thank you for allowing us to join Kendris and present this, I think, interesting seminar. Our office has been around since 1955, so we're about 70. We started off with a young lawyer at the time. I'm afraid he's no longer with us, Lellos Dimitriadis. He started off and continued his work until more people came in. And now we're 12 lawyers and 13 support staff. We only do certain things. First, we believe very much in values and client care. We are committed to what we do. We may be small, but we think we are a boutique in what we are doing, and to some extent we are successful. It started off as company law. It moved into trust and successions. We have commercial law, intellectual property, and human rights. And we litigate before the European Court of Human Rights a number of issues. So if that's just a short introduction from my side, then I'll pass this on back to Marios, and he can take it from there. So thank you, Maria.
Thank you, Achilles. So a very short recap of our part one of the webinar. We talked about Mr. George and his legacy. Many of you would have joined the first version, but we would like in this second iteration to explain again what Mr. George has in terms of assets, what his family looks like, and we have Mr. George's family tree on this slide. So Mr. George and Mrs. Maria have 3 children, 2 sons and 1 daughter. Their first son is married and living in the UK and has 2 grandchildren. Their second son is unmarried, has a grandchild, and lives in Cyprus. And their third child is their daughter, who is married and living in the USA. Now, you may recall in the previous webinar, we talked about how it was looking like it was going to go. So Mr. George was having some issues in considering how to leave his assets to the next generation. And the next generation were facing some issues themselves, in particular, the first son and the second son. So we just show a very short, again, recap of what the ownership structure looked like. So Mr. George's assets can be considered into 4 pots. So he has properties in his own name. These are large plots of land in occupied Cyprus and in the island of Cyprus as a whole. Included in those large plots of land is a family vineyard. He also owns the family home directly in his own name, an apartment in Greece, and some houses in the UK. The shares, he has an operational business in Cyprus, which he built up from the get-go on his own, bootstrapped it from the beginning, and is still very much actively involved in that business. He has investments in one company in the UK and another company in Greece, where he's just participating but not really actively doing much. His third pot is cash and investments, which he has in Cyprus, in Greece, and in the UK. And within these cash and investments, he also maybe has some life insurance, but we will see why that is a maybe and why that is maybe not. And in his collections, he has an art collection which he holds in Cyprus, and that art collection mainly sits in the family home where he lives with Mrs. Maria. Now, Mr. George, unfortunately for this case study, and as very realistically often so happens, has suddenly passed away. So we are going to look at what happens if Mr. George suddenly passes away and he has no plan. So all of the assets that we have seen in the previous slide, they sit in his own name. So now the children are left with sorrow and grief for Mr. George. But more importantly, and why we're here, is they need to get access to that estate. And they will get access to that estate in the form that is prescribed without a plan. So what does that look like? So in most cases, each child and the wife, the widow, Mrs. Maria, will get 1/4 each because they are all 1/4 heirs of the estate. Now, how is that split? Well, in practice, it's not so simple. It's actually a recipe for disaster. And we will go through each case. But first, what do you think normally happens when a patriarch, when the father of the family, the main person who owns the assets, passes away without a plan? I mean, the most obvious thing is there's friction, right? So what are the types of friction points that we see in general and in Cyprus, but not only in Cyprus? You see that there's always going to be friction between the family members. Now, this is an extended family. You will recall the first son is also married, so there is a wife here. You will also recall there are grandchildren. And Mrs. Maria is a grieving widow. And it's kind of Mrs. Maria versus the children. Now, why is that the case? Because Mrs. Maria is always going to try and maintain a balance. The children are feuding amongst themselves, but she tries to be the pillar of the family. She tries to take on the role of Mr. George, but she's the mother and the children are just fighting amongst each other. The first son, inevitably, in the course of time, has proceeded with a divorce with his wife. Now, he is living in the UK, remember, so his wife is going after the estate and the assets that he will inherit, which are she is making a claim against. The second son, he doesn't really work. He likes to spend money, really. And he continues to live in the family home, which he claims his dad has left him because He has nowhere else to go. Now, nobody really has a problem with that, except that the second son has started selling off the collection because nobody has any control over the collection. The art is now going missing, and the son is selling it for any kind of money because he would like to just take the money and spend it. Nobody really feels emotionally tied to that art collection, but Mr. George had very specifically wanted that collection to stay whole, and now that is already out of the window. The daughter continues to live in the USA and she tries to remain neutral. But as you can see from what we have in front of us, everybody is acting unreasonably. And this is normal. This happens because people are grieving, children are in a difficult position, they fight anger, they fight depression, the mother is kind of in the middle. So there is going to be envy amongst the children. They are going to start questioning everything. They are going to start questioning the values of things. They are going to start questioning whether that asset should go to the second son because he has no job and he decides he wants to live in the family home, or whether he should sell the art because he has really nothing else to go by. So everybody is going to start being envious of each other and questioning each other. And this is very normal because there is no plan, right? Especially when people start making claims to assets and giving values to assets, that's when it really starts to get complicated. But really, what should happen without a plan is somebody needs to take care of the estate. So who takes care of the estate? This is what we call an executor to the estate. So the heirs somehow, while they're arguing with each other, have to all decide to appoint someone to administer the estate. Now, while this feuding is going on, there is no beginning of this process. There is no appointment of an executor to the estate. And if the executor is not there, pretty much everyone is running wild and doing whatever they like with those assets. So the process does not begin. If at one point the process should be decided as let's appoint someone, let's get it over and done with, then somehow they have to agree amongst themselves who is going to pay that executor. Now, most of the times, the heirs don't really think about this, but who is going to pay that executor to begin to put time and effort to go through every single asset everywhere in the world and start to go through the processes of probate, payment of taxes, payment of expenses, and so on, so as to determine which assets go to whom, and then to divide that by 4. So in short, somebody has to pay the executor. Now, who is going to be that person? We don't really know. Nobody can agree. So let's look at the properties. So what happens to the properties? The family home, I mean, at this point, the second son is living in the family home and nobody is really doing much to move him out. The plots of land, they just sit there, and the family vineyard deteriorates because there is no one to collect the vine, there is nobody to make the wine, and nothing is really happening. So that family vineyard, which was a sentimental asset to Mr. George, just deteriorates away, unfortunately. Let's look at the land in occupied Cyprus, assuming that somebody has the title deeds somewhere, assuming that somebody has done that piece of work to collect the title deeds. It's very important to ensure they are in the right name. So if a property sits on a company, and Achilles will explain in more detail later, then the company is the heir in that case. If you are declaring the wrong name, and instead of a company, you're declaring the owner as Mr. George, you could run into trouble. It could just cause more delays and it could be very difficult to get the properties. The apartment in Greece, it will be subject to probate. Probate is when you go to court. And if you know Greece and you know Greek courts, they are not so different to Cyprus. It takes time, it takes energy, it takes legal costs. And Again, this means that the properties which are rented in Greece do not anymore earn income for the family. Houses in the UK will be, again, subject to probate in the UK, and possibly they will have to pay inheritance tax in the UK on that property. So for any other properties, if that is not known, they are lost. I mean, what does that mean? It means if there is title deeds somewhere in the world where Mr. George has purchased property and these are not declared or included in that file where the title deeds are included, nobody can get access to them, at least easily. Then come the shares of the companies. Now, where you have an operational business, the shares of the company will be split. Technically, everybody gets their share, but who actually owns that company? We are not going to go into detail of who is responsible to manage the operations of the company, but Mr. George was quite deeply involved in that day-to-day operation of the company. So who is going to be responsible to manage it? Well, technically, the shareholders will have to decide that, but again, it takes time. The company in Greece, the company in the UK, they will also get stuck in probate, much like the properties. The executor of the estate will have to go and employ those legal persons responsible to go and take care of those shares so that probate, after probate, the owners can take charge of those shares. And in the UK, there may be even tax to pay, depending on what assets the UK company owns. Last, again, the last but not least question, did Mr. George have any shares in any other companies? That cannot be known. You could do multiple searches, but then it involves many, many registrars, lots and lots of cost and time by the executor, which the children will have to approve along with Mrs. Maria. In terms of cash and investments, the cash in Cyprus is there, and that is probably the fastest asset that the children can get a hold of. But again, has any money been allocated to the operational business or the family vineyard? Probably not. So that is probably the cash they will go through to start making the exercise with the executor of the estate. Cash in Greece goes to probate, cash in the UK goes to probate again. And then the life insurance, I mean, why do I have a question mark next to life insurance? Because first of all, it's almost impossible to know if you have life insurance, if the information of the next of kin is not properly updated with the life insurance, and that may well have changed over time. Maybe somebody has changed their email address or telephone number, or maybe their residential address. Sometimes you find that life insurance is not always easily accessible by the children. And then if you have life insurance, in what countries and how many life insurance premiums are being paid by Mr. George? Again, the executor may try to find these, but then you do not have access to those funds at the time of his demise. So when Mr. George passes away, all of this cash is there, all of these assets are there, but you cannot access them. Probably the most important asset to Mr. George, and we say important because this is the closest to his heart, his art collection is being split and sold off. And he has no access to do much because he has passed away, and his family cannot stop someone from selling it because there is nothing really clear. And they are all just watching it go away. Mrs. Maria knows about other sentimental assets Mr. George had, jewelry and watches and pen collections and maybe stamp collections even, but she has no clue where those are. They could be stashed away at the safe deposit box in a bank, or they could be in the attic and nobody knows about them. But again, all of these assets, they are not planned to be distributed to the children. And so she has no clue, they have no clue, and the executor will have no clue. So as we said in the very beginning, it just is a recipe for disaster if you do not plan it properly. So a quick recap of how Mr. George can plan his succession, and then we can talk about what that looks like. So Mr. George could easily draft a will. That is a simple setup. A will, you mention the assets that you would like to pass on to which individuals you would like to pass them on to. It is cost efficient. It takes a legal consultant some time to draft the documents, and it makes perfect sense to do it, as it's simple and it's cost efficient. But it's not effective for international assets. International assets, you may need to have a will in each country, and in each country, to the extent that a will is possible, you will have to incur different costs. At the end, it still probably won't work for the children living in Cyprus. So there is going to be a taxable event. There is going to be a transfer at this stage. So when Mr. George passes away, these assets will have to be passed on to his children. At that point, even though we are talking about Cyprus, and in most cases there isn't a taxable situation, the international assets will be considered to be passed on, and there may be taxable events abroad. For example, in the UK and in Greece and in any other country. And with a will, the limitation is that the assets, the values of those assets, have to be distributed upon his demise. So there is no structure to hold those assets. They immediately have to be divided and passed on to the heirs. So why is that contrasted then to a succession planning structure? Well, succession planning structure is tailored to the needs of Mr. George and to the needs of the family. And certain assets can be given to certain individuals as well. So the grandchildren could get provisions for the future. It's not that only the heirs get to benefit. The grandchildren could benefit as beneficiaries, unnamed or named beneficiaries to such a trust. So you have the flexibility to go to the next generation. You may not only want to plan for the current next generation, but also the future generation of Mr. George's family. It costs to set up a succession planning structure, but again, you get the flexibility to, in many cases, avoid international probate, because there is no transfer of assets. At the point in time when the assets are being transferred to the trust, that is the point in time when you have a transfer. But after the demise of Mr. George, there is no transfer of the assets, including taxable events. Now, probably the main benefit that Mr. George could have is that he could implement this during his lifetime, and you to see that this actually works and functions exactly how he wants. So he could live for a year, he could live for another 20 years, but during his lifetime, he can see how the trust works for his family to be able to take advantage of the assets, but also to not have all this trouble that we have seen upon his sudden demise without a plan. So with that, I hand it over to Achilleas, who will talk to you about the possibilities for a succession plan.
Thank you. Thank you very much, Maria. You described the do nothing option. You explained if you do nothing, what will happen. What I will try to explain is what are the possibilities for a succession plan. And I will get into that immediately, and I will give you two options. One is a trust, and the other is a will. The big difference between the two is that if there is a trust, there is a continuation of the ownership. Mr. George was wise enough to set up a trust. He passed into the trust all the property that he wanted to avoid being the subject matter of succession, and that trust will continue to operate on the instructions of the settlor, the person who has set it up. And the way you can set it up is to also give instructions which the trustee, which normally is a professional, will have to follow in order to administer the estate. The importance is that there is a continuation of ownership. On the other hand, if you set up a will, and if Mr. George has done that, and very diligently decided to give this property to the son, this property to the daughter, this to the wife, and for as long as the wife lives, and then to be divided, that is a decision he has taken. But then the administrator of the executor of the will have to carry out these instructions, and they will have to be followed. If one were to choose between the two, and I will not tell you which is better or not, I will just describe which fits one purpose or the other, and then you can decide what fits your situation, is that if you do a trust, you can basically set it up, transfer the property in the trust itself, and see how it goes. And if there is any problem, you still have a chance to manage it. Whereas if it's a will, you do it, the event takes place, and then you have no control over it. Now, let's look at the properties that will be involved in the setup you decide. You make sure you have the title deeds. You need to know whether these properties have any mortgages, whether there are any charges. It's kind of difficult if you inherit property that has a number of charges or there's debt on it and you have to sort it out. Again, with the properties that Mr. George has in the occupied areas, are there certificates of ownership? I will point out that properties in the occupied areas, because the land registration office of Kyrenia and Famagusta was taken over by Turkey, had to reconstruct the land registration office. So back in 1974, people had to re-register their properties. And in order to corroborate the correctness of the registration, either the muhtar or the priest or a neighbor would confirm ownership. So there have been mistakes, and those mistakes need to be corrected. But there have been people who haven't even applied to the land registration office and never got the certificates of ownership. So they have nothing to prove that they own plot number so-and-so in Famagusta or in Kyrenia. And then if you go outside Cyprus, well, you really need to have a list of all these properties. Where are they? What are they? What's the value? Is Mr. George the owner? Is a company an owner? And then we have to go down that route and find out who owns the shares, and the shares are held by someone else. And it's issues that really have to be sorted out as early as possible so as to organize a smooth transition. Let me now turn to shares in a company. Are the company documents up to date? Normally, in dormant companies that were property owners, people may decide if the properties are in the occupied areas, well, we don't really need to update them. But even in a number of companies that relate to the area that is that the Republic is controlling, people are not meticulous. You need to ask the auditors and get the accounts of the companies. What assets do these companies have? Most importantly, who are the shareholders? Who are the members of the board? Who's the secretary who has to give all the notices? What's the registered office? Is it the family house? Is it the office? Is it somewhere else? Again, who operates the bank accounts, assuming they're bank accounts and assuming there is money in it? And most importantly, how do we find out whether Mr. George has any shares in any other companies in Cyprus? This is a really difficult exercise that could be solved very easily if there is an inventory of the shares that exist, and these could be part of the will or part of the trust that one has to set up. Let's look at cash and investments. Well, yes, of course, there's a bank account. Well, where is it? Do we know about it? Is it a joint bank account? Is it a solely operated bank account? who are the people, who are the authorized signatories to this bank account? And most important of all, what's the balance? Because if the balance is 0 or 1, then okay, you shouldn't worry. But if the balance is 100,000, then I suggest you start worrying. Now, life insurance policies is a difficult point. It's a difficult point because the person who pays for the insurance has been lost, and you don't know that you are the beneficiary. You don't know which insurance company has any such life insurance policy. Of course, the person will no longer have to pay the premium because the property has lapsed, because the event of death has come about, and therefore the payment is due. But do you know about it? How can you find out if there is no one to tell you? And these are issues that have to be clarified, especially as to who is the beneficiary and how much are they getting out of this life insurance policy. And look at the collection as well. Collections may not be so big in value, in monetary value, but I think in emotional value, Mr. George has attributes a great value to it. The price may be low, but the value may be very high. Is there an inventory? Is there a valuation of the assets? He's been collecting paintings, pens, watches, ancient pots that have to be registered with the museum authorities in Cyprus. All these things are there, they're legal, but what's the value? Is there an insurance? Of course, we don't expect the house to burn down, but there is an inventory. And the worst thing that one can see happening to one's collection is to see it being broken up and distributed to the heirs who do not have the emotional link to the collection that has been built up for so many years, but are only looking at the current monetary value, which is what it represents to them. And I think if we were to be true to Mr. George's legacy, we should really look after his collections, be that in art or in any other matter. Now, I think the next one goes to Marios, and he will take over for the benefits of the planned succession.
Thank you, Achilles. Thank you very much. I like the point around we don't expect the house to burn down, but who knows at the end of the day, when you have precious art collections sitting in a house, I mean, that is something that definitely should be insured. So thank you very much for bringing that up as well. I think it's useful now to go through the benefits of a planned succession. Some of it we have talked about before, but I think it's very important that we stress these to the individuals who are planning their succession. So what is the most important thing in the case of Mr. George is he can choose the person who is responsible to execute the estate or to act as trustee. And regardless of whether you go with a trust or with a will, at least you have planned it. At least you have taken actively a decision as an individual that your wealth can be taken care of through this will or through this trust, that your wealth can continue to accumulate for the next generations, and that you see this living on in your legacy. I think that's the most important point, that you pass away with a plan and you have something that you know is going to work. The choices on the distribution of assets. I mean, Mr. George could say, look, family vineyard is not something my son in the UK is going to take care of, but I've always wanted my other son to maybe get involved. So you could say, I would like the family vineyard to go to that son, and I would like to give X amount of cash to that operation to see it, that it survives and it continues to work. And maybe then my son has something to keep him occupied in terms of a job. And maybe he is more interested in taking care of the legacy at a later date. But at any point in time, I have made that decision for my children. And I think that's very important to say, again, that you choose the person to take care of your estate, but you also choose the assets that you want to give to those persons in your life. It can limit the possibility of disputes. I mean, we are all very pragmatic people. It doesn't mean there won't be disputes. It just means that while it has been arranged and during your life, if there is a dispute, you could have a discussion with your children, you could have a discussion with your wife, you could agree to leave some more cash here and there so that people are more comfortable with liquid assets. And you could also arrange that your collections, that your very precious sentimental assets go to the right people. But also where there are properties, you could also decide that upon my demise, I would like these properties to be sold and exchanged for cash, or I would like to create a fund for my grandchildren so that they can go and study. And you limit the possibility of who gets access to what. You limit the possibility of 1/4 of each going to each individual in the family, be it cash, be it properties, and they can do whatever they like with it. All of a sudden, they come into a large amount of wealth. So you can limit the possibility of these disputes through planning. The inventory that has already taken place, you have already incurred that cost being Mr. George. Your children do not all of a sudden have to go out, find an executor, find money to pay them, wait for them to do an inventory, risk losing the inventory in case something goes wrong, because that's already done. And with an inventory, you already have the list of assets. And within that list of assets, you can easily discuss and kind of negotiate amongst the children what each individual would like to have. And in addition to those benefits, we bring some which may not be 100% relevant to Cypriots who are inheriting Cypriot assets. I mean, the no change in ownership may be something that you don't really think of, but when you have international assets, you have multiple taxable events which could take place at the point of his demise, where there is a change in ownership. So internationally, in many jurisdictions, a change in ownership is a taxable event. With a trust, you can plan for those tax obligations. You can set cash aside so that, for example, when the homes in the UK are transferred from one generation to the next, through a trust, you could already arrange that the tax payments are made. And when those homes are sold or distributed to the individuals, you can already plan ahead that you have the cash to pay for those tax obligations. In terms of the operational business, you can already plan and define the needs for that operational business. So if there is cash that needs to be used by that business, if you already know because you are Mr. George and you have been doing this all your life, you know there is a big cash commitment in order for that business to continue operating. You plan it, you include it, and you arrange for that cash to be set aside. Same goes for the family vineyard. You can plan because you have a trust. The companies do continue to operate. I think that is one of the most important points to make in terms of planning for the next, the legacy of that family business. You can continue to operate those companies because there is no change in ownership. The banks have not really frozen the bank accounts while a change of ownership takes place. The employees continue to be paid and the suppliers are happy. And so happy customers, happy suppliers, the business continues to grow. And again, we mentioned this last, but very important to say this is not the least important. The sentimental assets, the family collections are retained whole. And that is because those are the wishes of Mr. George and they are written and included in a succession planning structure. I quickly hand it over to Achilleas, if that's fine, Achilleas.
Yeah,
Just to
absolutely,
offer,
absolutely. Yeah, we're getting there.
yeah.
Well, let's look at the case study. I want you to see how the picture is if there is no plan, and how the picture is if there is a plan. Let's look at the no plan situation. The no plan situation is that the properties, the shares, the cash, the investments, and the collections are all in a big bundle. They all belong to Mr. George. The event takes place and the heirs are activated, and the two red arrows show how all the heirs are entitled to to a part of all of the estate. And that's the problem, that everybody takes a share in the whole estate. That is the problem. Contrast this with this, which is a planned succession. You have the people, Mrs. Maria, the son, a first son, the second son, and the daughter. You have the trust, which is the box in which all the properties are placed, but the transfer has taken place. So the properties, if I were to remind you of the large plots of land in the occupied areas, on the large plots of land in the areas not under the control of Turkey, including the vineyard, the apartment in Greece, the houses in the UK, all those are in a block where the trustee, on specific instructions from Mr. George, has to carry out his wishes. The same happens with the shares. There is a continuity in the shareholding structure, both in the company in Greece, in the company in the UK, and most importantly, in the company in Cyprus. Clearly, we're not talking about management today. We're only talking about continuation of ownership. But just to move in the third category, the cash and the investments, either in Cyprus, in the UK, or in Switzerland, are all looked after in the sense that they are all part of the box called trust. Last but not least, the art collection is now looked after by the trustee because the trust owns it and nobody can touch it and nobody can start selling off the best painting or the painting he doesn't like most and pocketing the money or even putting the money in the estate. The trust through the trustee has a specific aim, it has a plan, it's normally set out in letters of wishes, but more importantly, Mr. George could test the viability or the methodology of the trust while he's still with us and not wait for having a will to pass this on. And maybe I'll pass it on to Marius now for the last part.
So thank you very much, Achilleas. I think it has been quite clearly presented, and I think we have got the message across. However, I would like to open the chat to questions, and if there are questions, please feel free to put those in the chat. We have one question from the beginning of this webinar. Would you like to take that, Achilles? It is regarding the whether the spouse would get.
Yeah, I saw that. Yeah, the inheritance. My understanding is that all heirs are ranked equally. I think it used to be the case that the wife would have a priority in the sense that she would be 50%. But my understanding is that currently all heirs are ranked equally. So there's 3 children and a wife, that's 4, that's a quarter, and you divide the property, you divide the estate accordingly. So I think that's the only question I've seen, but I'm more than happy to take any others. Or we actually finished in time. Sorry, we finished on time. I think we budgeted 45 minutes, and we were to the second right
Yep.
with the time, Marie. So that was quite good. On the questions point, would be happy to take any from people. I mean, perhaps one thing just to start the discussion, and I know I may be obsessive about this and people's collections, but people may also consider donating their collections. I mean, I could imagine family collections either going on loan to one of the museums that are in Cyprus or some of the government institutions, or you can actually donate it. And if the institution to whom you are donating is a charitable one, then during your life, you may be able to take advantage of the tax benefit that that donation may have. We have not presented Mr. George as being a charitable person, and perhaps that's something we should consider next time, that he should be thinking about giving something to charity or his favorite charity, or donating part of his collection to the government art collection, or to, if he has any antiquities, he may wish to donate in the newly formed museum that hopefully we will get in Nicosia. So all these things that people may feel that will preserve their collections or assets, and also allow the public to have a view and also admire the beauty that they were taken for in order when they were acquiring it. So I think perhaps that's something we should look at when we are presenting this again for people, that there's also a charitable side of things where donations or charity should be taken into account, because I think that's also part of living in a society and sharing with others.
Thank you for that thought, Achilles. That's actually a very nice thought to close this on. I want to remind everyone as well that we are available. You may scan the QR code on your screen, visit our website, reach out to us on LinkedIn, or otherwise ask your questions, and we will be very happy to sit down and look at each individual case. I think as a closing point for me, is that it's very important to see this as general information. What generally works for an individual may not work for others. This is why we are having these sessions. We would like to create the awareness and to also trigger those thought-provoking moments to individuals and their families who are perhaps in a similar situation, and maybe not widely discussing these issues amongst their family. We are more than happy to take your requests. So thank you very much for this question. I see actually we have one more question in the chat relating to the assets of Mr. George in the form of cash, if they are under the UK estate when Mr. George passes away in Cyprus. So please, Achilles, would you like to?
Yeah, no, we said this before, Maria. We're not giving tax advice, okay. But prima facie, at first glance at this, is that if one has assets in the UK, be they cash or property, and the person is resident in Cyprus, normally probate in the UK will attract inheritance tax at a certain rate minus certain deductions. So the fact that you have assets in the UK will trigger the possibility of inheritance tax, even though you lived and died in Cyprus. But I don't like giving tax advice in countries I am not licensed to practice. This is just a general thought, which I would have thought applies in all countries. But again, it all depends on the tax setup in each country, and whether they're directly owned, they're owned through companies, they're owned through trusts, or what have you. The important thing is that looking at these issues increases awareness of the need to avoid the do-nothing option. We have presented, of course, the do nothing option is always available, but our suggestion is to look at this and decide to either do a will or do a trust, but more importantly, do the groundwork before doing the will or the trust, so that if for some reason the do nothing option by default applies, you at least have an inventory of the properties, assets, what have you, that Mr. George has, and people are not in the dark chasing assets in registries or looking at insurance companies to get life insurance payments and that sort of thing. So basically, if there's one message that I could pass on from today is please think about it and do something. Do nothing is not an option for me.
Thank you very much for that, Achilleas. I think it was going to be the same comment from me, just to say these are obviously imaginary scenarios, but the point is to trigger the thought of what happens to these international assets. Each asset category we have seen today and each jurisdiction we have seen today is an entirely separate chapter on its own. And the point is to trigger the thought that you should act early and not leave it until somebody else has to deal with this issue. There is one more question. I think we can take this last one. Why a Cyprus will is not effective with regards to property situated outside of Cyprus?
Yeah, that's not a definite rule. That's a presumption. Normally, and this is an overgeneralization, inheritance in relation to land follows the law of the country in which the land is situated. And that's for practical reasons, really. You can't have the law of Cyprus, which says a will has to be in this way, apply to a country where, in order to dispose of your property, for example, you need 3 witnesses, and your Cyprus will would have 2 witnesses. And therefore, in this imaginary country where 3 witnesses are required, you would not be able to validately transfer the land. So the rule of thumb, and I repeat, not advice, is that normally land goes with the law of the land, and therefore the will that has to be set up has to at least take into account these requirements so as to avoid invalidity claims on the basis of strange things like how many witnesses do you need to a will.
So thank you very much for those questions, and thank you very much, Achilleas, for responding. Again, we are more than happy to take questions. Please feel free to reach out to us directly by email or any other means. And thank you very much for your attention.
Thank you. Goodbye.